Good morning. Welcome to SVN Live, our weekly property broadcast for SVN for September 18th, 2017. We want to wish everyone a good morning and a good day. Hope you had an excellent weekend. We've got a great lineup for you this morning, and we want to begin with a couple of economic talking points. We always try to give you some current information that you might use with your clients and benefit your own practice. First up, CoStar reports solid second quarter price growth for commercial real estate. They really have two measures, the equally weighted, which is their smaller properties, the one most important to SVN probably. That index rose 5% in the second quarter and 1.4% just in June. The weighted average for larger properties index rose 4.1% for the quarter and 1.3% in June. All good news. While there may be some price confusion at the beginning of the year, we certainly saw that, it is becoming increasingly clear that investors are still buyers of assets and prices have not peaked. Good news for all of us in the brokerage business. Also, additionally, office and apartment completions decline as retail recovers in second quarter. Reese gave us some good news, especially if you're doing retail or apartments, because as you know, apartments were really being somewhat overbuilt maybe. They reported that unit completions were 37,600 in the second quarter, down from 50,000 in just the first quarter. That's a lot of apartment units to be delivered in America in 3 months. Office completions were down to 7.5 million square feet from 9.5 million. And look at the number for retail. Everyone's talking about retail being soft and in transition, and yet it rose to 2.9 million from 1.7 million in the previous quarter. All encouraging news, but the most important part is the decline in apartment completions. If new supply kind of gets moderated or stable and at its normal level, this sector will be very unlikely to experience a downturn, which many of us fear because apartments tend to be the leading economic indicator in commercial real estate as a product type. All right, we want to talk about a couple of our recently closed transactions and highlight those. First up is Pete Colvin and Kurt Lord. They joined forces on this deal, closed at $1,248,000. $350 generals within the Colvin team have been closed. Triple net transactions. This was only $135 a foot and was only a 2-year-old deal. Congratulations, and Kurt, congratulations as well. We want to congratulate Henry Hanna and Chris Peak for closing this retail opportunity in Salisbury, Maryland. $1,008,000, only $71 a foot. Sellers retiring, which is a great place to be. Out-of-state exchange buyer. And the SVN Miller Commercial Group will do the property management and just part of our full service, particularly in that region. Henry, congratulations to you as well, Chris. Hey, Kristen Wilson-Asman, congratulations. We remember this deal when it was presented on SVN Live. It closed at a nice round $50,000 a unit in Columbus, Ohio, $2,004,000 for 48 units, 7 cap, which is outstanding opportunity for the buyer and the seller. It's resale with a 25% appreciation in less than a year. So obviously, you know how to make money in Columbus, Ohio, and certainly Wilson Commercial can help you do that. Hey, we want to congratulate Scott Maisel and Drew Dillon. They just closed this Lake Street industrial opportunity in Chicago, $4,150,000, sold to an owner-user, and we were the second broker on the transaction, but got it done. Of course, when you have about a 70% market share in the West Loop, you have a tendency to have a head start. Damian Langclose, congratulations. Our friend down in Augusta, Georgia, just closed this $34,850,000 apartment complex, $77,000 a unit, and a 6.25 cap. Congratulations on that, Damien. I know you've been working really hard on that transaction. And Fannie Mae financed it with their new green program. Congrats. All right, we've got great featured inventory this morning, and about $22 million worth of it. And we've got over $500,000 worth of buy-side fee. 100% of the time we share that fee 50-50 with anyone that closes a transaction with us. We've got a couple of transactions that are subject to offer, and that fee is not included in there. So it's a good week to be on SVN Live. Let's open up with Drew Dillon, Chad Schrodel, and Scott Maisel. They have another outstanding opportunity for you. Chad's going to tell you about it.
Thanks, John. We have an incredible redevelopment opportunity in Chicago's West Loop. This is a 3-story, about 28,000 square foot above grade historic loft building. And the key here is it's just a couple blocks from the Metra and L stations in this neighborhood. And for that reason, the transportation, this submarket is home to Boeing, Pepsi, Twitter, LinkedIn, and SC Johnson just bought a property about a block from here. There are no other buildings like this available and delivered 100% vacant in this submarket. So it's a great opportunity to be able to fully renovate the building and have no legacy leases that are below market in place, so you can fill it up at full market leasing. We have tons of additional info, including some historic tax credits available here, and we'd love to give you 2.5% upon the sale. Thanks.
All right, Chad, thank you very much. Let's go to Wayne Kaplan, also in Chicago. Wayne always lists outstandingly well-located real estate, and today's no different.
Good morning, SVN. This is a represent. We had this property under contract, and unfortunately it fell apart due to a timing issue with the previous buyer's 1031. So we're back on the market here. As John always likes to say, this is the kind of property that just about everybody should have at least one person in their database that they would want to show this to, based on the size, location, and return. The property is about a 7,000 square foot, 3-tenant retail leased investment in Winnetka, Illinois. It's on Green Bay Road, which is a heavily trafficked street in the Hubbard Woods area of Winnetka, if people are familiar. Winnetka is one of the highest income areas in the entire country. We've got an average household income of over $300,000 and an average home value approaching $1 million in this submarket. The property is about 2 blocks from the Metra train. We're offering it now at nearly a 7.5 cap. Tenants are stable. They have been there. All 3 tenants have been there for many years, with one tenant, East Street Denim, having been there, I think, for nearly 15 years. It's the kind of submarket where these tenants are going to want to be. You've got an existing furniture store / designer, East Street Denim, which is a high-end apparel shop, certainly germane to the area, and then there's a Pilates studio that has been there for many years. Good property, very good condition, very good return. Would love to send everyone a commission check. So, like I said, if everyone should hopefully have somebody to present this to. Thank you. Good morning.
All right, Wayne, thank you very much, and you are so right. Gorgeous real estate, as Main Street as you get. Speaking of retail opportunities, Troy Meyer and Kevin Matthews have joined forces to bring us another Colorado Springs opportunity. Troy's going to tell you about it this morning.
Good morning. Thanks, John. This is Troy, presenting on behalf of the team here in Denver. I'm proud to present the Centennial Shopping Center in Colorado Springs. It's a 5-unit center, well located in northwest Colorado Springs, not far from the famous Garden of the Gods Park, which is a national landmark. Surrounding area is very affluent, and the submarket has an extremely low vacancy rate of 3.8%. It's one of the lowest in the city. 4 of the 5 units in the center are leased to quality tenants on staggered leases. The other unit is vacant. Current tenants include Marco's Pizza, Bamboo Court Chinese Restaurant, Canyon Crest Liquors, and a hair salon. So you can see they're all food and service oriented. The thing I really like about the deal is that lone vacancy happens to be the best space in the center, which is the end cap along Centennial Boulevard. The owners are apartment investors out of California. This is the only retail property they own, and they're ready to transition their capital back into what they know. They had their property manager trying to lease the vacant space, but he didn't have much luck. So we recommended a leasing broker who we're also working with on the sale, and he already has a couple prospects for the space. One of them's pretty hot on it, so I wouldn't be surprised if this is leased in the next month or two. We're currently priced at a 6.25 cap rate on the existing 75% occupancy, and if you could get a new tenant in there at market rate, cap rate would be about 9%, which is probably a couple hundred basis points above market for this type of retail property in the Springs. We don't come across these easy upside deals very often, so I'd recommend sending it to any of your value-add retail buyers. Package is ready. Thanks, and have a great week, everybody.
All right, Troy, thank you very much. Let's look at a single tenant deal that Jonathan Eckert, Justin Horowitz, and Paul Borgeson have for us out of Scottsdale. This is in Safford, Arizona, just a great agricultural community, and one that you'd like to have in your portfolio.
Good morning, SVN. On behalf of Justin Horowitz and Paul Borgeson, this is Jonathan Eckert at SVN Desert Commercial Advisors in Phoenix. This is an opportunity to purchase a fee simple interest in a single tenant absolute triple net Arby's with just over 10 years remaining on the lease. It's located in Safford, Arizona, which is in Graham County, Arizona, about 3 hours southeast of Phoenix and 2 hours northeast of Tucson, just off of Highway 70. The property is well located with a lot of national retailers along the thoroughfare. It's at a 7% cap rate, which is about 50 basis points above where these Arby's are trading. So it's a good opportunity with the 2% annual increases to hedge against inflation. Please send your buyers. We have a 2.5% buy-side fee. Thank you very much and have a great day.
All right, Jonathan, thank you, and we appreciate that coming out of Phoenix. Let's go to Lucas Ward and Don Mercer. They weren't able to be with us last week because of the flooding and the rains and the storm, and we're so happy that they're with us this week to talk about their industrial opportunity.
Hello, John. Good morning. Lucas Ward here on behalf of the team presenting 1195 Victor Hill Road. Folks, just want to tell you a little bit, if you're unfamiliar with Greenville, we're currently the fourth fastest growing community in the United States of America. And that's greatly attributed to sort of the industrial boom that we're going through at the moment. Extremely low wages, median home price under $200,000. But just wanted to go over a few of the attributes as to why this is a very significant listing for us at the moment. And that's really the location. So starting with Greenville, we have a 6% industrial vacancy at the moment, which that's in 206 million square feet. Since 2016, we've absorbed over 5.5 million square feet. Now, most of that is for large tier 1 and tier 2s, but this infill, 10,000 to 40,000 square feet, some of the most underserved size of property in the entire state. So what's really driving us along here is our South Carolina Port Authority, which includes the Port of Charleston, which is now going to be the deepest port on the East Coast at 52 feet, as well as our inland port in Greer. So very important statistic, $53 billion in annual economic impact of our port system. Folks, if you see on here, 3.5 miles from the Greer Inland Port, that inland port is responsible for 26 billion of that annual impact. So we have 42,000 square feet available for you here, fully fenced, right next to BMW Manufacturing Company's head office. We have utilities readily available to the site. That gross potential income does not include what our seller has leased up in his front lawn here. That's how tight things are. So we expect as CoStar comes out with their next report for the quarter that will have vacancies even tighter. Nice healthy buy-side fee to be able to offer for you today. From an investor's perspective, this is great, a very rare opportunity, also great for an owner user that's coming to the area to take advantage of the I-85, what we call the boom belt, connecting Virginia all the way down to Alabama. Most importantly, we're dead center in the middle between Charlotte and Atlanta. So thank you very much for allowing us to present. And if you have any industrial needs or anybody coming to South Carolina, please definitely don't hesitate to give us a call.
All right, Lucas, thank you very much, and thank you for the excellent information on your market, and I'm glad you guys are dry and well. Let's go to Ali Mushtaq. I'm also glad that he is well and dry. He has an outstanding opportunity for us this morning in Almonte Springs, Florida, $5,866,000. Ali, are you there?
Yes, John, good morning.
Okay, good morning.
All right, good morning, everyone. So here is a great opportunity, the 150 Southwest Bond Drive. It's flagged as the Days Inn of Altamont. It's entitled for 120 rooms. Altogether, there's 112 rooms that are on the Star Report system. It will be delivered unencumbered of management. So I just, after sending this over to SVN for the, sorry about the thing. So the actual cap rate that we have based upon 2016 is 12.47 cap rate percent. I have updated that on the website. This property is doing excellent. Just to give you a comparison, 2015 to 2016, occupancy is up 10.1%, ADR is up 2.3%, the RevPAR is up 12.7%. If we compare 2016 to year-to-date of 2017, we have occupancy at 73.1, the ADR at 67.04, RevPAR is at $48.98. I think it's an excellent opportunity for an owner user. I did take out $80,000 for a salary of a manager or a property management fee. If you have any further questions, feel free to reach me at my contact information, and I look forward to talking with you soon. We do also have a 1.5% buy-side commission. Thank you, John.
Ali, thank you very much. Let's go to North Carolina. Our SFR team, Jeff Klein and Michael Finch, have another portfolio. They brought in Tom McMahon, our local market expert. They priced it at $7.5 million.
Good morning, SVN. Thank you, John. Canterbury Crossing in Gastonia, North Carolina is our first build-for-rent investment opportunity in North Carolina, consisting of 36-home build-for-rent attached single-family residential rental investment property, which will begin construction this coming October. The rental subdivision, located in Gastonia, the second largest city within the Charlotte metro area and only 20 minutes from downtown Charlotte. Canterbury Crossing has great access to the employment hubs such as Bank of America's corporate headquarters, Wells Fargo's corporate East Coast operations, as well as the Charlotte Douglas International Airport, the world's 23rd busiest airport. Charlotte metro area has been experiencing significant growth in the last 15 years, which bodes very well for the success of Canterbury Crossing. These quality new build homes for rental investment features an opportunity for a buyer to purchase homes at certificate of occupancy and place tenants prior to completion, so the investment is immediately cash flowing. The projected stabilized year one cap rate of 6.89% has conservatively been modeled given the market rents in the area. For all of your mid-tier multifamily investors, this is a great opportunity to transition them away from some of the more challenged cap rate deals in multifamily into this build-for-rent space. Very challenging to find a 6.8% cap rate on brand new construction anywhere in the country today. The developer builder here is a seasoned build-for-rent investment, is seasoned in the build-for-rent investment space and has been building and leasing himself in the Southeast for years. But he's been selling in smaller packages to smaller investors, maybe 2 or 3 homes at a time. But now, after he had discovered our platform, he's given SVN the opportunity to expose to a much broader market and bring one investment cash flow buyer to this awesome opportunity. The Canterbury Crossing build-for-rent portfolio offers no capital expenditures for several years after occupancy and spacious floor plans throughout, with 2-story, 3-bed, 2-bath units with single-car garages. The rental rates here for year one are projected to be about $1,550 per month for these beautiful homes. Again, pre-leasing will begin once homes are under construction and once builder reaches certificate of occupancy on the first block of homes. Buyer can close escrow and move tenants in ASAP, creating immediate cash flow and return on your investment. Please reach out to Jeff Klein or myself and bring your investors. We've got a couple hundred more build-for-rent deals coming in the North Carolina and Nashville, Tennessee markets in the near term, and we would be happy to hop on the phone with you and your client to discuss the benefits of build-for-rent compared to traditional multifamily deals or existing SFR portfolios. Appreciate your time. Have a good day, all.
All right, Michael, thank you very much, and we appreciate those opportunities as always. And of course, the Carolinas and Tennessee are where people are retiring and love to live. So great real estate, great location. We've got events and webinars always here at SVN for our advisors and team. We've got the office council meeting. Jeff Albee and Al Lindemann will be hosting that later this morning, 11 on the West Coast, 2 on the East Coast. And then Friday, please dial in for the SFR Portfolio Council meeting. That'll be 9:30 on the West Coast, 12:30 on the East Coast. Learn everything you can about those exciting opportunities, and almost always they have a nice fee attached to them as well. We also want to make sure that you're lined up for the Mid-America Conference, October 3rd and October 4th. This will be in St. Louis, Missouri, and Kurt Lord has kindly been the host and organizer of that. Karen Cooksey can be reached. Make sure that you get registered, and it should be a good time. All right, we also have our last jumpstart for the year, November 28th to December 1st. As you know, San Diego has the best climatics in the world, literally, and it's a great place to spend after Thanksgiving, before Christmas. Come see us. We have an outstanding lineup in a 4-day event, very interactive, and very much what can help you get ready for an outstanding 2018, which we hope is the best year ever for everybody. Also, it's time to save the date. Hyatt Regency Tamaya Resort and Spa in New Mexico is going to be the site of our 2018 annual conference. Really looking forward to that opportunity, and we look forward to seeing everybody there. Put a few bucks aside and make sure that you join us, because you will definitely not be disappointed. We have a great lineup and a very interesting, different approach to our national conference for you. Last but not least, we want to thank you for joining us this morning, and for all the presenters in arranging their time to present those opportunities to you. As you know, at SVN, everything we have and do is at www.svn.com. And 100% of the time, 50% of the commission is available to you when you close a transaction with us. And we look forward to you doing just that. Please have a good and healthy week and a good day.